Wow, what a 7-week run for Bitcoin as it approached its all-time highs, then got smashed in the face by a sledgehammer and dropped all the way down to 16.5. And then by the end of day Monday, it's already trading right around $19,500 per coin. It's pretty phenomenal on how resilient cryptocurrency and in particular Bitcoin really is. So what caused such a drastic drop? Will Bitcoin crash again? And is this the beginning of a downtrend for BTC? So let's take a look at what news broke over this past week and why this bull run in 2020-2021 is significantly different from the one that we saw back in 2017. So let's get going. If you're new to Bitcoin, just want to learn more, or just listen to me rant for a couple of minutes about how great it is, make sure to subscribe as we deliver more content just like this and even on traditional markets, and make sure to hit the like button. So what caused this change of wind direction here for Bitcoin? A $3,000 dropper in just 48 hours? A couple of key factors come into play. Bitcoin can be falling victim to a large amount of leverage trades on the derivative market. About $1.8 billion worth of derivative positions were closed between November 25th and November 26th, which could drive the spot price downward. Based on a technical analysis, a pullback was likely, considering that Bitcoin was consistently trading over its 10-day moving average, although its 14-day RSI suggests that it was overbought. A pullback of 20% is nothing uncommon to a Bitcoin bull run. There was also a rumor that the US Treasury Department was to start tracking any self-hosted crypto wallets, and trust me, the crypto community loves their privacy. OKX, one of the larger crypto exchanges, also halted withdrawals back in October of Bitcoin. Now, if you think about the price of Bitcoin in October compared to where it is now, it's seen a pretty significant run-up. So when those users are granted access right before Thanksgiving, there's a probability that some of them sold Bitcoin in order to obtain some of those gains. That would also drive the price downward as there's more supply on the market. And while this stumble may seem significant, the truth is it was actually pretty short-lived. It's already bounced back to what was the 2017 all-time highs, and now it's looking to break through 20,000. But I have a funny feeling it's not just stopping at 20,000 or 30,000. This thing is going to have significant legs, and this bull run is going to not only continue, but it is going to thrive in the next several months. Why do I think that Bitcoin's just going to keep running upward? The answer is pretty simple. It's because cash is trash. You heard me correctly. Cash is trash.
Cash is your headline.
But cash is trash.
According to Citigroup, the dollar could drop by more than 20% in 2021, and it's actually already fallen more than 11% since March of this year. With the government's printing more and more paper money and the value and the purchasing power of that dollar getting crushed, paper money is becoming more and more worthless. So why Bitcoin? Why now? Doesn't it crash all the time? Why is 2020 any different from 2017? Those are all valid questions, but this time is different because of institutional investing. Now, for those of us that have been in Bitcoin for quite some time, really I'd say quite some time being the last 3 years or so, we've been waiting for big institutions to get involved, and it's finally happening. What we're noticing is it's not the traditional big institutions like a Goldman Sachs or a Merrill Lynch, but it's fintech coming to save the day. And as our global economy becomes more digitized, it's more important that those companies get involved than the traditional institutional investing firms. First of these companies is Square. And starting back in 2018, Square allowed its users to buy and store cryptocurrency, in particular Bitcoin, on its Cash App mobile wallet. Since that point, revenues have been going bonkers, consistently growing year over year and quarter over quarter. As a matter of fact, in Q3 of 2020, its Bitcoin revenues rose over $1 billion in that quarter alone. Pretty impressive. To further strengthen its position behind cryptocurrencies, Square on October 8th announced it had purchased 4,709 Bitcoin, valued at approximately $50 million, because they believe that Bitcoin provides economic empowerment and really includes and institute a global economic system. The other powerhouse in the fintech space is PayPal, and they've recently announced that it's going to allow all of its users to buy, sell, and store crypto on its PayPal platform. Now, for those of you that might be a little bit younger, like myself, They're also going to be rolling out cryptocurrency to its Venmo platform in the first half of next year. Not only will you be able to buy, sell, and hold crypto, but PayPal's looking to include crypto as a funding source for over 26 million merchants. Now, this is huge for adoption for cryptocurrency, and in particular, the most notable, which is Bitcoin. A large reason for the rise in Bitcoin price over the past several weeks are these large fintech institutions. They're buying up the newly mined or the newly created Bitcoin and really reducing the amount of supply that's in the open markets, therefore driving the price upward. Since PayPal made this announcement back in the beginning of November, it looks like 70% of all Bitcoin being mined are actually being purchased by PayPal. The other 30% are actually being purchased by Cash App. So there's really no new supply hitting the markets, and that's forcing the price of Bitcoin even higher. Simply put, it's like Bitcoin is not being created fast enough for the large institutions and for the retail investor at the same time. We are consuming Bitcoin so fast that the algorithm cannot keep up, and because the supply is low and the demand is moderate to high, the price of Bitcoin just keeps going up. How is this different from 2017? Because even back then, there were some merchants that did accept Bitcoin and crypto as a form of payment, like Overstock.com, for example. With fintech getting involved, it brings in a brand new customer, and it makes the process of buying and selling your crypto so much more simple. I have Coinbase. I use Coinbase personally to buy my cryptocurrency, but it's kind of laborious. It's unfamiliar. This brings more of Bitcoin and cryptocurrency into the mainstream. As a matter of fact, it's so simple that a nutless monkey can do it.
Of course I could. A nutless monkey could do your job. Well, now go get drunk and take credit at all the parties.
I would never do that to you.
Joking.
Yeah?
Yeah.
There he is.
Go have fun.
All
Go
right.
have fun.
We're having a... Okay. Thank you, Les. Thank you. You have a good night.
But seriously, a nutless monkey could do your job.
Good.
People also said that Bitcoin would never be successful unless Wall Street was bought in. And guess what? That's actually happening. A great way to identify this is to look at Grayscale's Bitcoin Investment Trust, or the GBTC. JP Morgan has identified the GBTC as a leading indicator of institutional investing. And if what you see over the past 6 months is a significant run-up, it suggests that institutions are becoming more and more interested in investing in Bitcoin. In Q2 of this year, more than a dozen firms filed with the SEC that they had invested into the GBTC, including one of my favorites, ARK Invest, headed by Cathie Wood. We've also seen a bunch of big names on Wall Street change their position on Bitcoin. Paul Tudor Jones, the hedge fund manager, has mentioned that 2% of his portfolio is now in Bitcoin. Stan Druckenmiller said that he owns more gold than Bitcoin, but if gold works, most likely Bitcoin will work as well. And if Bitcoin works, it will work better. And lastly, Raoul Pal, who's a former hedge fund manager himself and co-founder of Real Vision, a financial media company, stated yesterday on Twitter that he is selling all of his gold and buying 80% Bitcoin and the other 20% Ethereum. With all the additional support in the crypto space and all the adoption taking place, we are far beyond what we experienced in 2017. However, there's still a long way to go. Bitcoin has had a phenomenal run, and by no means do I think it's anywhere close to over. With governments printing more and more money and an economic stimulus looming in the winds, it's really just a matter of time before Bitcoin really takes off. There are too many catalysts at this time to stop the adoption and to suppress the growth of the value of Bitcoin. As a reminder, this is not investment advice, and you should always seek advice from a professional. This is just how I go about managing my portfolio, and I do believe that Bitcoin should be a small percentage of what everyone owns. Will it crash again? Yes. Its value has dropped by more than 30% over 12 times. It's dropped by more than 80% on 3 different occasions. Even if it's been crushed by more than 80%, it always bounces back to new all-time highs. It's bound to happen again. But this time is different from 2017, and to the extent, we'll just have to wait and see. As always, save, invest, grow. Ciao, ciao.